is that the S corporation pays no federal income tax. Let me say that again. An S corporation pays zero federal income tax, which is humongous because the normal tax rate for a corporation is 21%. Now, you're probably thinking like I am, that is too good to be true. How can I make all this income and pay no taxes? Well, this is the deal. So Malcolm Lewis here, coming to you with our weekly Accountants Corner. So this week, as I promised last week, I'm going to talk to you about S corporations. As I've already talked about, LLCs can be taxed a number of different ways on the internal revenue side, because based on how you're structured, it's based on how IRS is going to treat you from a taxation standpoint. Your company structure can be the difference of paying thousands and thousands of taxes that you literally don't need to pay to paying minimum taxes. So I want to talk to you today about a favorite corporation. Many people probably heard about it, called S corporations. What is an S corporation? Well, S corporation is a corporation that is normally for a smaller corporation, maybe 1, 2, 3 member corporation. And that corporation has a lot of advantages. One of the number one advantages the S corporation has is that the S corporation pays no federal income tax. Let me say that again. An S corporation pays zero federal income tax, which is humongous because the normal tax rate for a corporation is 21%. Now, you're probably thinking like I am, that is too good to be true. How can I make all this income and pay no taxes? Well, this is the deal. So when you get income or net profit on the S corporation side, instead of it being taxed on the corporation side, it's taxed on the individual personal tax return, which normally is at a very lower tax base, a lower tax liability, so your tax bill normally is a lot less. There's a lot of different things that come with S corporations. We use them to structure different things like 401k, benefit packages for the individual owner of the company. So those are some of the things that you can think about when you talk about S corporations. Normally, somebody comes to me and say, Malcolm, I've been a sole proprietor. I want to think about going to an S corporation. I heard about it. When should I go and transfer that business over to an S corporation? Or somebody who's starting a business for the first time, why should I be an S corporation? And what are the signs that you see or the indicators say this person needs to be an S corporation? Number one, normally if your income is going to be over $30,000, $40,000, and you have either a business that is a very low overhead business, you don't pay the rent, you don't pay salaries, that means you're going to get eaten up on taxes, on your personal taxes, if you try to do a sole proprietorship, because you're going to pay a hefty, what we call self-employment tax. The S corporation does away with all of that. And so does an S corporation fits everybody? No, it's not a one size fits all. Some people, it may not be advantageous to build an S corporation, maybe because they have W-2 income from another job on a personal tax return and they're at a very high tax rate. So when we bring the income over from the S corporation, it's going to get taxed at a much higher rate than it would have got taxed on the corporation side. So we normally just kind of got to go through a few different scenarios, look at the variables that exist as relates to the tax structure. But normally the S corporation is a very beneficial tax model structure. We save companies, businesses, thousands upon thousands of dollars each year. I just did a return the other day. That return, that person was a sole proprietor last year. They paid in excess of $20-some thousand. Just changing them over to an S corporation, they paid $7,000. It was $14,000 plus difference in their tax liability just because they taxed their tax structure was what it needed to be as an S corporation. So listen, we look forward to talking to you or talk to somebody else about it. Make sure they know what they're talking about when they're doing S corporation. Again, because you can hurt yourself, there are certain criteria that you need, such as the owner of the corporation. They need to put themselves on a W-2 and pay themselves what we call a reasonable compensation. but we try to show our clients how to be paying money during the year in payroll taxes, that you can leverage that same S corporation and pick up credits such as employment credits and other different credits that the IRS will give you, and it will offset any tax liability you pay on the payroll tax side. It is a phenomenal structure. 8 out of 10 clients come that have not a whole lot of employees, not a whole lot of, they're not trying to go and sell a lot of stock in their company. Normally that S corporation is a beneficial tax structure. Again, it's not for everybody because it does bring some different requirements that if you're very small and very basic, it may kind of make your world a little bit more complicated. Listen, we thank you for tuning in today. Listen, next week we're going to come to you. We'll probably talk about C corporations or partnerships. I'm not sure yet. Just tune in next week and find out. But if you have any other questions regarding S corporations, we are the experts. Not only are we accountants, but we're business accountants. That makes a difference because we understand not only how to do the tax return, but we understand how to scale a business up using tax returns. We thank you for tuning in again. Have a marvelous weekend. We'll talk to you again next week.